What up?
2020. We are almost there. It's we're nearing the end of the year, and after spending so much time in recent months talking about stocks and investing, we figured what better way to wrap up the year than getting into a pretty huge prediction you have for where stocks are going to end up this year, and then also reveal a little project that we've been working on for December that we think you'll like. I don't know. It's a lot of us.
Yeah.
More of us.
Let's start with that prediction. I don't think it's a prediction. I think it's fact that the stock market is going to end the year at a record high. We've already hit it a couple times this year. The cards are lining up to have a really, really strong end and then a really strong beginning of 2020. After that, after the beginning, I don't know. You might want to start moving your stocks around. Start looking at those trailing stops videos that we did. For the next 6 months or so, things are looking really, really bullish.
It's looking pretty nice.
We're up about 20% on the year.
Yeah, I mean, this is basically the exact chart that you want to see for a year for an investment. So if you've been invested in the broad markets, or if you've invested in some of the biggest companies on the market, congratulations, because you had a great year, and you think the good times are going to continue for at least the near term.
Yeah, but the thing with that chart is, if you go out there onto Main Street and talk to any, average investor, they're not going to know that the S&P 500 is up 20% this year. We have an impeachment battle, we have the China tariff battle, all sorts of big issues in Washington, and the news is very dire. But if you look at the facts, you look at a ticker of the S&P 500, it's doing very well. And to me, that's the ultimate bullish factor in all this for the end of the year. As investors start to realize that, hey, things are pretty good, the economic data is not that bad, they're going to start pouring a lot more money into the stock market. They're probably buying at the wrong time, but the market is going to start rising. We get into that parabolic phase of things when kind of the dumb money is getting into things, and it can be very good as long as you're watching it and know when to get back out.
Well, we've seen this throughout history. Wall Street kind of has a lot of crisis points priced into the movement of stocks, or priced into the market. Folks who are paying attention to this stuff day in and day out, and reading the economic data and looking at corporate data and seeing what's happening with earnings, they're not as worried necessarily about an impeachment. They're not as worried necessarily about a shift in regime, but they are obviously seeing something there, some positive points. And what happens is, once you get to Main Street and once that information starts to kind of spread there, then you have, everybody pouring in and being like, hey, you know what? I've been on the sidelines for the 10 years that Disney's been flying up, that Apple's been flying up, whatever, but now I'm ready to get in. Yeah. Now that I've seen 10 years of proven success. And unfortunately, that often coincides with when things start to go awry. Yeah,
the very best sell indicator I've ever found in my history doing this is when the headlines are painting a picture that you can't lose.
So, but you've stated there are really three things that are going to push stocks to record highs at the end of the year and give us a really strong push into 2020. We already kind of touched on the first one.
Dumb people and dumb money.
Yeah. Sorry if that's you and you're thinking about getting into a major stock for the first time. It's just a phrase. You're not actually dumb. Probably.
But to be clear, now is a good time to be getting into stocks. Just have an eye on 6 months on getting back out. There's going to be some good money to be made, but you just have to. This isn't long-term investing right now. This is kind of short, speculative. It's not necessarily being dumb, but we're following the dumb money into it.
Yeah, it's a good time to get in and set your trailing stops. Ding.
All right, so that takes us to the, I mentioned three ideas. That takes us to the second idea. The first idea is the kind of the parabolic phrase, the dumb money moving in. The second
Let's just call that money flow. I don't like dumb money.
Okay, sorry.
Okay, money flow.
Takes one to know one. So the second idea is interest rates. You know me, I'm always talking about interest rates, and right now it's kind of counterintuitive. So if you've watched interest rates over the last few weeks, you have, right?
Yeah.
It's fascinating. You get up in the morning just to look at interest rates.
Yeah, go cross-eyed.
So if you look at the 10-year Treasury, we're getting real close to that 2% mark again, right? So we were way down. We hit like 1.4 something. and then the dollar is really strong. Now it's coming back up. What's interesting is it's coming back up at the same time the Fed has lowered rates. So that's a sign that the big institutions, Wall Street investors, are starting to look out on the yield curve, see some opportunity. They're looking to see the economic data isn't that bad. So looking at interest rates, rising interest rates in the short term are good news. It's a good sign of investor sentiment. It's a good sign that more money is coming out of bonds because bond prices go up when interest rates go down. So that money is coming back out of bonds and going into stocks. So we're seeing that kind of turnover right now, which is very bullish again for that kind of dumb money going into the stock market. So that's number one.
Right.
And number two is interest rates. And number three is the economic data.
You kind of mentioned earlier, when you said interest rates, you said rising interest rates, but aren't interest rates being cut?
So it's kind of counterintuitive. So the Fed is cutting interest rates.
Okay.
At the same time, the Fed, Jay Powell is cutting interest rates, the real short-term interest rate. The free market is out there moving interest rates higher.
Got it. Sometimes you got to slow it down for the dumb money.
So let's get to number three, that economic data I mentioned. We won't get into specifics about exactly which data because it changes all the time. But if we look at unemployment, if we look at, a big one to watch is the European data. So if we go back 2 or 3 months, the economic data was not looking good. Everybody was talking about recession, inverted yield curve, that sort of thing. But if you look at the core data, it really wasn't that bad. It dipped, it slowed down, but things have stabilized. And here in the United States, things are actually pretty strong, if not really strong. We have strong economic data. The free market is doing what it does best with interest rates, and so they're rising right now, despite kind of a hawkish tone from the Federal Reserve lowering rates. And for the record, for the long term, I think rates are going to go back down. I think we're going to get to 2.5%, and they're going to come right back down. And then money flow, of course, as this economic data looks good, as people are talking about 20% gain in the stock market, the fear of missing out, people are going to put their money into the stock market. It's going to shoot the S&P 500 higher. We're going to continue to hit all-time highs. We're going to finish the year at an all-time high, and we'll be bankrupt this time next year.
Okay. I hope we bleep that because it kind of gets into what we're going to be talking about next month. So I teased up top, we have something very special coming in December. Starting on December 1st, we'll be releasing videos every day because you subscribers have been very good this year. Yeah, so we're going to get into the good stocks, the bad stocks, the stocks you should stay the hell away from, and some
penny
stocks. Some penny stocks. Some penny stocks that could be very good for your portfolio. And it's going to be a lot of fun. You do not want to miss it, so be sure to check back in with us. But for the meantime, cheers.
Cheers to that.
How do I get this little mug?
So there you go. There are my predictions for the end of this year and early 2020. Let me know what you think of them. Send a comment or a question down below. Be sure to hit that subscribe button because on December 1st, we have some good things coming your way.